Good morning, everyone. Welcome to the joint webinar, Economic Suspense with Safe Zone and Hamriya. We have our consultancy, Mr. Verona and Amirta. Today will be the third awareness session regarding the ESR and what has been updated. And please take Verona started.
Thank you so much, Manal. Thank you everyone for joining us. So as Manal quickly briefed you, the topic of today is basically the updates, as many of you would know, regarding economic substance. We'll take you topic by topic, and I'll go through the agenda. So we'll first cover a brief on the background of economic substance and what has happened regarding the change of the law. We'll go through again who does ESR apply to, relevant activities, tests, key updates of the ESR law itself, licensee reporting requirements, and lastly, consequences of non-compliance. On all fronts, there's been pretty much updates within the new legislation. The first topic, just a quick background on economic substance. I'm sure many of you know what has driven economic substance or driven the introduction of economic substance in UAE. So it was originally introduced in the UAE by the regulations on 30th April 2019. This is pursuant to the global guidelines and standards set by OECD. What has happened recently in August 2020 is that this original legislation published in April 2019 was completely replaced by an updated legislation. This means that the new legislation will apply retrospectively for financial years commencing from 1 January 2019. This would mean that all of you that have previously assessed your status for ESR for financial years commencing from 1 January 2019 will need to consider whether these updates will impact your business and the notifications that you have already submitted. So who does ESR apply to? I'm going back to the basics a little because there's been some changes. So ESR applies to every licensee that carries out relevant activity that derives income from the activity in UAE. This includes free zones entities or companies. So that means that even if it's owned by a sole individual, so long that it's a separate juridical person, it's under the scope of ESR if you're performing a relevant activity. A licensee is defined within the new legislation as a juridical person, which, as I mentioned earlier, a corporate legal entity with a separate legal personality from its owners. What it means by juridical person is that even if that company is owned by a sole owner, it is considered a juridical person. And the second new introduction is an unincorporated partnership. Previously, it wasn't addressed in the old legislation. It's been introduced, which could potentially cover unincorporated JVs, which you don't necessarily hold a trade license in the UAE. So the licensee, if you're a juridical person on incorporated partnership and you carry out a relevant activity in the UAE, you come under the umbrella of ESR. What has been removed was a natural person that was originally covered in the old legislation. So now if you have a license to do business as an individual, you're no longer covered under ESR, which means it will not apply to you. So the next topic that I'll cover, which will be a topic of interest to many of you, is exemptions. So we know who does it apply to. Now, the good news is that the exemptions has been expanded from the previous exemption that only covered government-owned business, whether or not it's directly or indirectly owned by the UAE government. This requirement has been completely removed. So if you are a government-owned company, exemptions does not automatically apply to you any longer. You will need to consider whether you meet any of the 4 new exemptions criteria. The first is that if you're a licensee and you are a tax resident outside UAE, What we mean by a tax resident is effectively you as a UAE entity are paying corporate tax in a jurisdiction overseas due to the business that you have. This generally means that you have created some form of permanent residency in those countries, and therefore you file a corporate tax return on your profits. If you do that, the exemption will apply to you. The next criteria is investment funds and investment holding entities. As this is both safe zone and Hamria free zone entities, we don't expect this to apply to a majority of you, if not probably all of you, because this is a very traditional definition of investment funds, where we consider entities that manage the investment funds itself, as opposed to if you have an investment fund investing in you as a company and act as a shareholder. The third exemption criteria is wholly owned businesses of UAE residents which are not part of a multinational group and only carries on business in the UAE. Personally, I would expect that this third criteria will be the most relevant to most of the licensees in both safe zone and Hamria free zone. This is because, especially if you are a wholly owned UAE business and you are a UAE resident running that business, it's unlikely that you'll be part of a multinational group, which means that you can apply for an exemption. The good news is that you will not have to actually meet ESR test. You file an annual notification itself. This will be a great relief to a majority of licensees, I would expect. And the last exemption criteria is a branch of a foreign company whose income is subject to tax in a foreign jurisdiction. It's very similar to the first criteria, only now it addresses branches of a foreign company. For the most part, I would expect that most branches of a foreign company pays tax in another jurisdiction, especially if that the holding company or the headquarters per se is in a jurisdiction that is regulated by tax. Because very broadly, you will file a consolidated corporate tax return in those respective jurisdictions. Bear in mind, in order to avail any of these exemptions, you will need to submit documentation proof to the authorities. In the event if you fail to provide documentation proof, the exemptions will no longer apply. So for example, if you are claiming that you are paying tax in another jurisdiction, you are required to actually provide a copy of these tax returns to the relevant authorities, meaning safe zone or Hamria free zone, when submitting the notifications claiming those exemptions. I briefly covered this, I touched on it when I went through the 4 criteria earlier. If you're exempted, what do you need to do? ESR notification will still need to be filed on a year-by-year basis. So if you're exempted on year 1, you will need to still continue submitting the notification to avail the exemption in year 2, which means you will need to file the proof of to avail the exemption, the documentation proof, in years 2, 3, 4 accordingly. In the event if you do not have proof, say year 1 you have proof, but the year 2 you do not have your tax returns to prove that you paid tax overseas, year 2 the exemption will no longer apply to you. So it's very, very important that all this evidence to avail any of the exemptions above is provided to the authorities when filing the notification. So the next topic we'll cover is relevant activities under ESR. So I'm sure many of you are very familiar with this slide and very familiar with the relevant activities that you have seen provided by many consultants in UAE. These 9 categories that you have seen from day 1 has remained unchanged with the new updates. That's good news. That means you don't have to assess a brand new category of relevant activities considering the updates. However, there has been changes in some definitions. There's been a change in the definition of distribution and service center, which will be the most common relevant activity I would expect for licensees of safe zone and Hamria free zone. And high-risk IP's definition. High-risk IP is well, a special category which we don't expect will actually impact a majority of the licensees. But we'll cover that because there was only been 2 significant changes in the relevant activities definition. The substance over form approach should still be taken, which means that your activities to be considered under relevant activities is not limited to what is stated in your trade license. So it doesn't really matter if you hold a commercial license or industrial license. It doesn't lend itself to mean that you are performing a headquarter business or a shipping business. Even if you have shipping in your trade license business, it doesn't automatically mean that you're a shipping business. You will need to consider the definition and look at the substance over form approach. And lastly, we just want to mention again, the detailed guidance of all these relevant activities will be available on the MOF website. In fact, the guidance has also been updated as well as the FAQs on the MOF website. So we will only cover the changes in the definitions of distribution and service center and high-risk IP in this session. However, if you need detailed guidance on other relevant activities, please go to the website to check whether or not those relevant activities would apply to you. So now that we have covered relevant activities as a whole, I'll address the specific changes to distribution and service center and high risk. We have carved out distribution business and service center business into 2 parts because they have separate definitions. Also, they are lumped under the same category. Distribution and service business in the old law previously covered the purchase of goods from a foreign related party, importing the same goods into the UAE and subsequently reselling them outside UAE. It was a fairly restrictive definition, which required a person to both buy from a related party, import and export. And very frankly, a lot of people fell outside the scope of ESR, especially trading companies, because they didn't either import or export the goods and they performed, say, a drop shipment business. What has happened is that they have completely amended that definition and removed the requirement to import and export. So that will mean that if you are part of a multinational group and you purchase goods from a foreign related party, this will automatically pull you into the scope of ESR, meaning you will perform a distribution and service center business by virtue of the definition of a distribution business. What we will expect is that more people will get caught under the net because of the change in the definition. This will also catch people who were previously excluded. Say, for example, they have bought the goods from a foreign related party, imported the goods and sold it in the UAE market. Previously, because the goods were never exported, they didn't fall under the definition. Now, companies with such business portfolios will need to consider whether the distribution relevant activity would apply to them. And the answer is that yes, it would. So that definition alone, I will expect that a lot of more companies will have to declare a distribution and service center business within the notification and subsequently file an ESR report. The second change is a service center business. Very similar to a distribution business, they have broadened the scope. Previously, the definition included providing services to a foreign group company in relation to a business overseas. They have removed the parts that mentioned in relation to the business overseas. In our opinion, the reason why that was removed is that in relation to business overseas is quite subjective. And a lot of people were considering that, say, for example, you were providing marketing support for a region in Africa. So a lot of those companies would have been excluded previously because it was in relation to a business overseas. That is no longer the case. Right now, the definition simply says providing services to a foreign group company. As a result, any service that you provide, irregardless of the context in terms of the global market, will mean that you come under the scope of a distribution and service business. This will cover if you provide administrative support, marketing support, sales support, even something as simple as shared cost service centers. That all now clearly comes under the service center business if it's done from the UAE. So just by the broadening of the definition as distribution and service business, and considering the type of licenses that that is relevant to both Hamriyah Free Zone and Safe Zone, we expect that these two changes to distribution business and service center business will impact you the most significantly, which may require you to also reassess the positions that you have taken in the previous notification file. Lastly, there has been some changes to a high-risk IP business. So a high-risk IP business is essentially companies who have acquired IP from a related party and subsequently earn income from that IP from a related party as well. You will need to hold that IP within your business in order to come under this category. Previously, there was a condition, there were two conditions for a high-risk IP business. One is, as I mentioned quickly, to buy it from a related party and to subsequently earn income from a related party as well. The second condition that was in the old law is that licensees who does not carry out R&D, branding, marketing, and distribution as part of its core income generating activity is also considered a high-risk IP. So they have completely removed that, which means less businesses will now fall under a high-risk IP business. So I'll cover some key updates on the relevant activities under ESR. So the first things that we will cover is the key clarifications under the guidance itself. So this wasn't a change within the legislation. It was updates that actually was addressed in the updated guidance issued by the MOF. So for holding company business, if you remember, that's one of the relevant activities, that 9 in the pyramid. They have clarified that real estate assets owned by licensees used solely for the purposes of the holding company business does not result in you being disqualified as a holding company business. Which means if you're a holding company business, solely earning dividend income from its equity interest that it holds. Holding a real estate asset, so long as you don't earn income from the asset and it's not a commercial activity that you perform, holding the real estate assets in itself does not disqualify you as a holding company business. The second clarification is on lease finance business. So if you recall the earlier awareness sessions, lease finance business also included interest income from intercompany loans. So they have further clarified that lease finance business also includes cash pooling arrangements used by multinational companies for cash management and intra-group financing. Cash pooling arrangements is essentially pooling the cash of MNCs under one entity, and the entity subsequently provides returns to its related party. So it's effectively a form of a loan to an intercompany, but it's just a way that multinational groups manage cash. So if any income is earned out of those cash pooling arrangements, it comes under your lease finance business. So now that we have covered key updates within legislation and the guides, the next thing that we want to address is the test itself. So what happens if you now perform a relevant activity? What comes next? The next question is, do you meet the ESR test? The good news is that the test remains very largely unchanged. There's been no significant changes to the test itself. You still have 3 tests that you will need to meet in the UAE. The first is that the core income generating activity of your relevant activity needs to be carried out from the UAE. So whatever key activities, say for example, your distribution business, taking orders will be a key core income generating activity of a distribution business that needs to be carried out from the UAE itself. A core income generating activity could differ from business to business. There is no fixed list of core income generating activities that you must perform, but you will need to justify what is the core income generating activity of your business in relation to the relevant activities identified and prove that it's carried out from the UAE. They do allow outsourcing of this core income generating if it's your business model. The only catch is that it needs to be done from a provider in the UAE with sufficient resources to perform that core income generating activity on your behalf. You can't double count that resources, and you also must adequately supervise this. So you need to demonstrate that you have adequate control over this outsourced core income generating activity. The next test is directed and managed. Directed and managed, principally it's still the same. There's just been a clarification that a director or a board member doesn't necessarily need to be a resident in the UAE. However, they require those board members, or at least the quorum of the board members, to be physically present in the UAE when taking strategic decisions. So that means if you have a meeting in regards of the relevant activity in UAE, the board members need to fly in and be present when taking those decisions. There is still no clear-cut direction on how many meetings are considered sufficient, but it's recommended that at least one is done each year. But this may differ from the size and the complexity of your business, and depending on what kind of decisions and at the frequency that is required for your individual business. And the last test is adequate employees, physical assets, and expenditure in the UAE. This third test has also remained unchanged. It effectively still means that you need to prove that for this relevant activity that you have executed, that you have adequate employees, physical assets, and expenditure for that relevant activity in the UAE. There is still no clear definition of saying that a company of earning a revenue of 10 million, how many employees is required? Because each business is different. Even if you're within the same industry, the way you do business could be very different. So adequate differs from company to company, and it's up to you as a business, the onus is on you to prove to the authorities and convince them that you have adequate people here, assets and expenditure to run the relevant activities from the UAE. So for the next topic, I'm going to pass you to my colleague Amrita, who will take you through some key updates and the last few topics of the presentation.
Thanks, Varuna. There are a few more updates in the ESR regulation which has amended and the new guide which is released by MOF. One of these key updates is regarding the treatment of branches and head office. Within the guide, the MOF has stated that the branches and the head office will not be considered as separate legal persons, and the branches are basically an extension of the head office. What does this mean to the branches registered in UAE is that now the head office and all the branches in UAE have to file a single notification. This is completely opposite to what was there in the earlier law, where each licensee, that is the branch and all the head office, had to file separate notification for under ESR. With respect to UAE branch of a foreign company, the MOF has clarified that this still continues to be considered as a separate legal person. Hence, if there are multiple branches of a foreign company in the UAE, each branch has to file separate notification. Moving on to the other key updates. The next update is regarding gross income. It's a clarification in the guide which states that while calculating the gross income at the time of ESR reporting, no expenses or costs should be deducted from the income for arriving at the gross income. Another significant update that has happened in the ESR regulation is regarding the National Assessing Authority. While this does not change the obligations of licensee, Federal Tax Authority has been introduced as the National Assessing Authority. The FTA will now be responsible to assess whether the licensee is meeting the ESR test and impose any administrative penalty if there is non-compliance. Also, the appeals will be heard and decided by the FTA. Another key update is regarding financial statements. Now, in the ESR report, licensees will be required to submit financial statements. Moving on to the next topic, we have drawn a flow chart which will help you to determine whether you are covered under ESR regulations. I think so Verona has touched upon this briefly, but this is summarized in a flow chart over here. To start with, we have to see if the licensee is a corporate person, a juridical person, or a natural person. If the licensee is a natural person, the ESR regulations do not apply. If it's a corporate body, the ESR regulations apply, and we'll go on to the next step to check whether the licensee is performing a relevant activity. If there is a relevant activity, then you have to file a ESR notification. Whether or not the licensee is exempt, you still have to file a ESR notification. If the licensee is exempt, you're not required to meet the ESR test. Also, if you are performing a relevant activity but you're not earning any income from the relevant activity, you're not required to meet the ESR test. Only if you are performing a relevant activity and earning income from the relevant activity, you are required to meet the ESR test and also file the annual ESR report. I think so we briefly touched upon the ESR test for licensees who fall within the scope of ESR, and that's the remaining part of the flow chart. The next part which we are going to talk about is a timeline, the key timelines in ESR. The first one is determination of the reporting period under ESR. This is basically the financial year of the licensee, or in case where there is no financial year, it is the anniversary of trade license. The next step in ESR is filing of ESR notification. The ESR notification has to be filed within 6 months from the end of the financial year. So the licensees who had financial year ending 31st of December 2019 were required to file a ESR notification by the 30th of June 2020. In the guide, it has been clarified that these notifications are to be resubmitted on an ESR portal to be introduced by the Ministry of Finance. The next timeline in under ESR is filing of ESR report by licensees who are covered under the scope of ESR. This is required to be filed within 12 months from the end of the financial year. The next part, we're going to look at the penalties which are applicable under the amended ESR regulation. Earlier in the old ESR law, the Ministry of Finance had given a range of penalties. This has now been clarified, and fixed penalties are provided for each non-compliance. The first non-compliance under ESR is failure to submit ESR notification and any relevant details requested by either the regulatory authority, that is SAIF zone or HAFSA, or FTA. So if you fail to do so, you will be penalized with a penalty. You will be penalized with AED 20,000. Earlier, this was a range of 10,000 to 20,000. The next non-compliance is failure to provide accurate information. Earlier, it was a range of 10,000 to 50,000. along with a deemed failure to demonstrate economic substance in the UAE. This has now been fixed to a higher cap of 50,000, and the deemed failure to demonstrate economic substance in UAE remains the same. The third non-compliance is failure to submit ESR report and demonstrate sufficient economic substance in the UAE. The first year of failure attracts a penalty of AED 50,000, and the subsequent year of failure attracts a penalty of 400,000 in addition to information exchange with foreign competent authorities and a possibility that the commercial license could be suspended, withdrawn, or not renewed. All these penalties will be levied by the FTA because that's the role of the National Assessing Authority now under the amended regulation. That summarizes the key updates under the ESR law. The floor is now open to any questions you have.
Right.
Thank you, Emeritus. Right, with questions?
Yes, we do have a couple of questions, and I'll just pick up those where there are hands raised. Please bear with me. Yeah, so the first question we have is from Oleg. Oleg Dorov, we are just unmuting you. You can put forth your question here. Can you hear us? I think there's some issues there. So we'll just move on to the next question.
Hi.
Oh, there we have.
Do you hear me?
Yes, we can.
Yes, we can hear you.
Thank you for ESR meeting. I have a question. If I have a FZE company and does it have to file ESR reports if it does international trading, buying, stocking, and selling of goods, which is distribution service, it's a relevant activity, but it is not part of a foreign group?
Okay, so you are a purely UAE-owned company and you're not part of any multinational group.
Yes, correct. Because it looks like it falls under relevant activity, but there is examples in the law which saying it only applies to a international part of international group. If a company in UAE buys some stocks from a related group and sells or distributes it, etc., etc.
Yeah, because you only own UAE company and not part of a global group, the distribution definition wouldn't apply to you because it requires the purchase from a foreign connected party.
Okay.
So you wouldn't have a foreign connected party.
Okay, so all I have to do is file ESR notification, but I don't have to do reports.
In your case, considering the revision of the law, you wouldn't even need to file the notification since you do not perform a relevant activity. Previously, okay. I know that everyone filed a notification whether or not you perform a relevant activity. Going forward, only if you perform a relevant activity, you'll be required to file that notification.
Thank you very much.
No worries.
Yeah, have a good day. Thanks.
You too.
Thank you. Now we have the next question from Sitil KM. We are just unmuting you. Can you hear us?
Yes. Hi. Thanks for selecting. Hi, Verona. Hi, Amrita. I represent Tunstall. It's a subsidiary of a German company. This company is formed to support the partners' activities in the region. It is just to do the sales support and if there is any technical supports and all. There is no income generated in the subsidiary here. But the German company is dealing directly with the partners. All the imports, trading, everything is between the partners and the German headquarters. do we fall under this ESR regulation?
Just to check, you are a subsidiary and not a branch.
Exactly.
Are they financing you by paying for the cost incurred of your subsidiary in UAE?
Correct.
So if you remember what Amrita covered, income is gross income. It doesn't matter if you charge your expenses at cost and you don't include a markup. Effectively, you will be earning income in your subsidiary for the cost recovery that you're charging to your holding company or your group companies. Effectively, yes, you should be performing a service center business.
Service center. Okay. So we should be filing this and we are not exempted, right?
Well, unless your subsidiary's income is taxed in any other jurisdiction overseas. You will need to check with your group company then.
Okay. Thank you. That answers.
No problem.
Thank you. We now move on to S. Murtaza. Can you hear us? Right, so I'll just move on to the next question. This is from Bhavin. Hi, Bhavin, can you hear us?
Yeah, I can hear you. I think so I was muted. Hi, good afternoon, Amrita and Verona. Thank you for your presentation. It was a very good presentation and we learned a lot. Just one question, because initially I missed a few 5-10 minutes because of technical glitch. Where we have to file this revised ECR notification, because FTA is now the authority. Is it still with the Hamria Free Zone or it will be FTA portal? And the report finally.
So the MOF is going to release the ESR portal where the notifications will be required to be resubmitted for the financial year ending 31st December 2019. We will update you once the portal is active.
Okay, thank you very much. Yeah, that answered my question. And they have still not rolled out that portal, correct?
Not yet. We'll update all the investors once it's out.
Okay, thank you. Thank you, Hamria Free Zone, for conducting this webinar. Yeah, thank you very much. All the team.
No problem.
Right. So Amrita and Verona, there is this one topic which is coming up every now and then where people are questioning whether financial statements to be submitted in the ESR report are required to be audited.
No, there is no requirement to audit. Of course, if you have audited financial statements, it's better to submit those. But there's no requirement in the ESR law that requires you to audit the financial statements for submission. Moving forward, your authorities, both Hamria and SAIF Zone, will or may request for some financial information. In that case, very similarly, it doesn't need to be audited by an auditor. You can submit management accounts or however your accounts are currently kept.
Right. So our next question is from Meena. Hi, Meena. Can you hear us? Okay, so I'll just move on to the next question now. This is from Vivek. I think we are missing these ones now.
It's okay, we can move on.
Yeah. I'll just pick up the next question from Murtaza again.
Sure.
Yeah, so I think there is some technical issue. I'll just read out his question. Murtaza, can you hear us? I'll just pick up his question. So his question is that what about the BVI company? We have the parent company in BVI who has an entity in Hafza, Hamria Free Zone, which is 100% owned by the BVI company. The activities are done in Hamria Free Zone company only. BVI is not doing any business at all.
So, I addressed it first that BVI has their own ESR legislation. So your parent company in BVI will need to assess ESR in BVI in itself. If I come down to the Hamria entity, it will depend what kind of services you perform. If you perform any services to the parent company in BVI, say for example, you provide administrative finance support, say you administer things for the BVI company, that's potentially a service center business. If you earn income from it, you will need to both submit the notification and meet the ESR test.
Right. So we now move on to the next question. This is from Tabassum Gulzar.
Hi.
Hello.
Yeah, my question is, being a resident company of the UAE, what are the requirements? Do we need to submit any notification being a resident to the authorities, or no need to?
So basically, we have to first check whether you are doing any relevant activity or not. If you are doing a relevant activity, you also have to assess whether you are covered under any exemption. So even if you are covered under the exemption, you'll still need to do the ESR notification. If you remember the process that we went through in the flow chart, we have to go through each and every step to determine whether you are required to file any notification or report under ESR. So just being a resident in UAE, would not determine your obligations under ESR.
Yeah, I understand. The thing is, we are not falling any under the relevant activity, but my question is, does the board of director person should have a visa in the UAE, so being justifying that the company is resident in the UAE, or just trade license is enough?
So to answer that question, if you are not doing any relevant activity, ESR does not apply to you, and hence you do not have to meet the ESR test. You're not required to meet the ESR test, and therefore the questions regarding visa of the directors, it's not related to ESR.
You fall back to your articles of association and the requirements for the formation of the company. ESR requirements will not apply to you.
Okay. If any company who is doing a relevant activity, and his board of director must need to be a resident if they want to apply for exemption, because I just confused in your exemption clarification point number 3, that was that if company is resident in the UAE, don't have any foreign companies, they don't need to be submit any notification.
So that means not the directors. The company needs to be owned by a UAE resident and not be part of a multinational group, and also only do business in the UAE, then the exemption will apply. So in that case, you're talking about the ownership of the company and not the directors.
Okay. Thank you.
No worries.
Thank you. So next question is from Mr. Manoj. I think I'll just read out his question. So his company, yeah, okay, there we have.
Can I talk? Yeah, see, we are basically based in India, and my subsidiary is in UAE. My UAE company has taken a loan, and we have a de facto subsidiary in Saudi and Kuwait. Now, can the loan which the UAE company has taken, they are paying interest for that. Now that interest we are back charging it to Saudi and Kuwait. Now will this fall under leasing business? That is what I want to know.
Do you charge Kuwait or KSA any interest on that loan that you are subsequently providing them?
Actually, I have the interest, the debit note for the interest comes to me. That debit
Yes.
note, I pass it on to my subsidiaries without I show it as interest and in my books, and then I am showing it as charging it back to the subsidiary. So whether it will fall under a leasing business and we'll have to fall under ESR.
I would expect it would. The reason why is that the interest expense that you incur for taking that loan, you are subsequently using that loan and charging interest onward to both KSA and Kuwait. If you did not charge an interest for that loan, so effectively you give it interest free to Kuwait and KSA, then it wouldn't apply. But if you are earning interest income from it, even though it's a back-to-back arrangement, lease finance would continue to apply.
And secondly, my second question was that, see, this ESR revision was to come. Now, when it is likely to come, because we want earlier, when we had filed this ESR as of 30th June, my accounting year ends on 31st March, actually. So
Okay.
I have filed, it is not from Jan to December, it is from, as per Indian accounting standards, that is as of 31st March. So though we have filed the ESR return, this portion, that is the interest portion what I talked about, has been missed out by us. So I want to revise my return. So can I do a revision of it?
Sure. Effectively, anyone who performs a relevant activity will need to resubmit that notification. So when you resubmit, you can include this lease finance as a relevant activity in that resubmission.
Okay. Okay. Thank you.
No problem.
Thank you. Can we take a few more questions?
Sure. We have about 10 more minutes left.
Right. Let's see. We have Pankaj here. He has a question. Pankaj, we have just unmuted you. Can you hear us? Okay, we'll just move on to the next participant. We have next question from Sharmeen Sada. Hi, Sharmeen. Okay.
Hello.
Yeah.
Yeah, can you hear me?
Yes, we can hear
Yes.
you.
Yeah, thank you. I just wrote it the question I'm going to ask you now. We have a different financial year starting from 1st December to 30th November. What will be the timeline for us to submit the ESR report and subsequently for the first for the notification and subsequently for the report?
Okay, so your first financial year, just to clarify, it was 1st January 2019 up to 30th November 2019.
No, our financial year is starting from 1st December
Oh, okay. Yeah, sorry. I thought it was
and
11
yes,
months.
ending on 30th November. Yeah.
Sure. So your first financial year for you that concerns ESR will be 1 December 2019 to 30th November 2020, which will mean that your notification, if you need to file one, will be due 31st May 2021.
31st May 2021.
Yep. For financial year 1st December 2019 up to 30th November 2020.
But when we have advised got advice from our auditor to file the notification, they suggest that you are not required to file the notification in this year. We also
Yes,
have a branch in DMCC. For that they have filed the notification, but not for the parent company in FZC.
yeah. Frankly, now the branch and parent company, you only need to file one notification. And since they're a branch and parent company, you have the same year end. ESR
Yeah.
applies to financial years commencing from 1 January 2019. So your first financial year commencing after 1 January 2019 will be your year ended 30th November 2020, which starts 1st December 2019. So what your auditor said is right. You don't have to file your notification because your financial year hasn't even ended yet. And after the end of your financial year, you have 6 months to file your notification, which means it's due 31st May 2021 next year.
Okay, on 31st May 2021, we need to file the notification first.
Yes, if you perform a relevant activity.
Yeah, the only relevant activity we have is the related party transactions. We don't fall
Yes.
in other relevant activities.
So you need to file that notification by 31st May 2021 for your financial year ending 30th November 2020.
Okay, and as per the new regulations, we don't have to file the separate notifications for branch or head office.
Yes,
We
you
can
file it
file
at head
only
office
one.
level.
Yes.
Yes.
Okay, okay, okay. Thank you so much. Thank you.
No problem.
Thank you. So next question we have is from Anna. Anna Martha.
Anna, can you hear us?
I think we'll just move on from that. Next question we have is from Rini. Rini Medawar. Hi, Rini.
Hello.
Hello.
Hi, Verona. Hi, Amrita. How are you doing?
I'm doing well.
I have 2 questions. No, so all the companies that fall under the revised scope will need to refile, correct?
Yes. So you have to reassess whether there is any change in the ESR notification submitted, and then refile it for the year ended 31st December 2019.
But the ones that do not fall under the revised, we don't have to resubmit.
Yes. So if you're not falling within the ESR scope, you don't have to submit it on the ESR portal.
Okay. And the second question, companies that will close in 2020, do we need to resubmit those ones?
So it's not a resubmission in that case. It would be a first submission because you have not already, I believe, submitted with the Hamria or SAIF zone. So it would be a first time submission, and the deadline for that still remains 6 months. But we do understand that some companies, that deadline has expired already. So we are waiting for further communication from MOF on this regard. So once the ESR portal is announced, they will give more information with regards to the timelines for filing notification for licensees whose reporting period has already completed.
All ESRs now will be uploaded on the ministry's portal, right?
That's correct. Okay. No submission to the regulatory authorities, Hamria, Free Zone or SAIF Zone.
Okay. Thank you so much.
No problem.
I think we have time for one last question. Yeah.
Yeah. All right. So next question is from Shiva Rama Krishna.
Hello,
Hi,
thank you.
Shivrama.
Am I audible?
Yeah. Yes.
Yes. It was really nice presentation. One of your presentations suggests regarding drop shipments. We have a company in Hamria Free Zone as well as in DOPSA, where we don't effectively bring the shipments into UAE. We will ask our foreign affiliate companies to deliver those materials directly to our customers in different locations. Earlier, we didn't submit the notification because they never entered into UAE. So now, as per your revised clarification, do we need to submit the notification?
Yes, you purchase from a foreign connected person, right?
Yeah, foreign affiliate. It is also one of our affiliate company.
Group companies, effectively, commonly controlled.
Correct, correct.
Yeah, then yes.
and those goods will never enter into UAE. We will send it directly to customer locations.
Yeah, I understand that. Previously, I agree with you. It didn't apply to you. However, the new requirement excludes the requirement to import and subsequently export. So previously, it did not cover businesses such as yours, but now you are covered under the distribution business. So you will need to resubmit or at least file a notification once the portal is up and running for your previous financial year.
Understand. And the same goes to services as well, isn't it? Because we ask our affiliate companies to go and perform services as well to a company located outside UAE. But the contract.
Sorry for interrupting. Services, you will need to basically consider if you perform a service, not if your affiliate company performs a service.
Oh, right. Because we actually gave them the subcontract to go and work in a company outside UAE. It is a contract between UAE company, which is a connected company or affiliate company with the other company in Netherlands. They go and perform services. So in that case, you feel we don't have to do this notification.
So in terms of that case, the person who's earning income is your Netherlands related entity, right?
We earn the income from the company in Tunisia.
Yeah, you
Tunisia
earn
is the place
income from the third party, and you effectively subcontract a part of that work to your Netherlands company. So if I'm looking at related party transactions, the income earned on that related party transaction is with your Netherlands company, and it becomes a related party expense for you. Regarding
correct,
that
it is
part of the work.
Yes.
So that's
correct,
not
correct.
relevant activities. If you become the subcontractor in that regard, then yes, you're performing a service center business.
Clear to me. Thank you very much. And there are no fines, isn't it, if we resubmit this ESR notification as per the guidelines that you mentioned?
Yeah, considering it was due to the change of the legislation, MOF has not officially mentioned anything regarding the fines, but so far they have not indicated that any fines would be levied. But that will be updated once we receive clear indications by MOF. That is now with both MOF and FDA and not with Hafsa or so.
Thank you very much. Thanks.
No worries. I think we have reached the end of the session. So if you need, a recording of this, it will be available with both Hafsa and SafeZone on their website. If you have any additional questions, there will be an email address that you can send it to, and we will also have our contact details at the end of the deck of slides. Nishi, could you flip it to the next slide? Nishi?
Yeah, sorry, I think the slides is just it's stuck. I'm sorry.
Okay. So anyhow, once the recording is available and the presentation is published, you will see both an email address for Hamria Free Zone. There it comes. You can see Hafsa's ESR address and as a Safe Zones. If you have any questions, please send it through to them, and we will work with authorities to see where we can help you. Do note that the authorities cannot provide technical answers or give you a surety of, this is exactly what relevant activity that you do, because they are administrative authority. If you need additional advice, we will recommend that you reach out to your consultants to do a proper assessment where you get written advice that you can rely upon. And I'll pass it on to Manal for closing words.
Just thank you, everyone. And if you need anything, we are here to assist you. And thank you again. Goodbye. Have a good day.
Thank you, everybody.
Thank you.